Hi, this is Michael Carlin with Henry+Horne Wealth Management. Today joined by Shauna Anderson and Dre Qualls. We want to provide you a quick market update regarding the coronavirus and the stock market, how we're evolving portfolios. Last week was an incredible week. The market went down more in the shortest period of time than we've seen ever in recorded history, with a -12, -13% print.
Yeah, a lot of the headlines now are, what is this going to lead to for supply chain disruption, and will it lead to demand disruption? So expectations for the first quarter is 2.1 GDP. We know it will be less, but how much less is really the question now.
In fact, there's a lot of scary headlines out there right now. And with the correction in the market, just keep in mind some of that's structural. People can trade faster than they ever have been able to previously. But moreover, if you just look at the common flu in the past 2 weeks, we've had 2,000 people pass away. And if you look historically, with the swine flu, we had 204,000 people die globally from that. And it practically didn't affect markets at the time.
Correct. And if you look at some of the positives, the housing affordability is there in that interest rates have come way down, wages look great. And if you take that in combination, we have a nice support from the housing market with not only the stock market, but the U.S. economy.
Yeah, Michael briefly touched on it. Job market is strong. So fundamentals are strong. We've got wages growing more than inflation. And with those favorable interest rates, all is good.
Yeah, and if you look, there's a lot of capitulation that happened last week. Capitulation, then people were buying put protection. There was a lot of equity outflows, money leaving the market. And when you take a look at all of the things in what happened with the market and with treasuries, it actually creates a little bit of a buy signal, believe it or not, to get back into the market.
And to that point, actually, we have the Fed looking to cut rates this month. It should be something like 50 basis points. That's stimulative. So if we see that happen, and again, the odds are 100% of that happening, what we're going to see is markets drive upward.
And again, so what you're looking at is that you should be expecting over these next couple of weeks, couple of months, relief rallies like what we're getting today. Today's Monday, where the market goes up because there's relatively good news. But don't be surprised that if we get negative news that the market may trade down. It's likely to be a choppy market with results going all over the place.
Yeah, we'll continue to see that volatility ebb and flow as we navigate the coronavirus and all the news that's coming out of China and the other countries. But ultimately, what we're doing now is we are being cautious, but we are taking the stance of buying right now. So we're looking for opportunities, and ultimately it's great.
Yeah, and you may end up seeing more stocks in your portfolio, which might surprise you. But again, we're trying to take the proactive approach, given all the data, and provide you the latest update with the coronavirus in the stock market. If you have questions, email us, call us, contact us. We're available anytime. Take care. Have a great day.
Thank you.
Thank you.